Welcome back, traders. Thanks for joining me here today. In today's video, I will show you how to use the Dynamic Linear Regression Channels indicator to detect market trade opportunities. The Dynamic Linear Regression Channels is an indicator that plots new linear regression channels from points where a previous channel is broken, thus keeping the length of bars in the trend dynamic. Regression channels are used in detecting trend changes, support and resistance levels, and to trade mean reversions. This is a powerful and simple-to-use technical indicator for chart patterns and raw price action traders in the financial market. To apply this trading indicator, search the keywords Dynamic Linear Regression Channels and select the EP version by Iravan on TradingView's Community Scripts folder. Let's check the parameter settings of this indicator. Under the input settings, there is an upper deviation and a lower deviation. By default, they are set to 2. Note, setting higher values of upper and lower deviation may result in an error if the price never breaks the channel and the script references too many bars than supported. Under the Style folder, there is an option to check and uncheck the line fills and lines. Make sure to have both boxes checked. First, I will show you how to use the technical indicator to trade the continuation of trends in the market before we proceed to its reversal process. For the continuation of a bearish trend, make sure to see that the indicator plots a rising channel after a bullish countertrend in a strong bearish market trend. Next, make sure to see a strong bearish close of the price below the lower deviation. Next, go short below the close of the bearish price breakout and place your stop loss at the last bullish high swing that led to the bearish price breakout of the rising channel. For the continuation of a bullish trend, make sure to see that the indicator plots a falling channel after a bearish countertrend in a strong bullish market trend. Next, make sure to see a strong bullish close of the price above the upper deviation. Next, go long above the close of the bullish price breakout and place your stop loss at the last bearish low swing that led to the bullish price breakout of the falling channel. Also, the Dynamic Linear Regression Channels indicator can also help to detect double tops and bottoms patterns breakout in the market. As we can see on this price chart, after the Dynamic Linear Regression Channels market the double top in this market, price later proceeded to break out of the lower deviation. In this type of bearish price breakout, the best zone to apply stop loss would be at the top of the red midline of the channel here. The same strategy can be reverted to trade the double bottom chart pattern bullish price breakout with this technical indicator. It's time I show you how to implement this indicator for the reversal of trends in the market. To trade the reversal of a bullish trend into a bearish trend, first, watch out for the formation of a rising channel. Next, watch out for a strong bearish close of the price below the lower deviation. To be on the safer side, it's better to wait for a retest of confirmation before selling the bearish price breakout. A retest of confirmation will suggest sellers are willing to reverse the bullish trend down. To trade the reversal of a bearish trend into a bullish trend, first, watch out for the formation of a falling channel. Next, watch out for a strong bullish close of the price above the upper deviation. To be on the safer side, it's better to wait for a retest of confirmation. A retest of confirmation will suggest buyers are willing to reverse the bearish trend up. It's time we execute trade setups based on the Dynamic Linear Regression Channels indicator trading strategy. Now let's see how to use the indicator to confirm a selling setup in the market. As we can see in this downtrend, after the price made a bullish pullback in this downtrend, the price later progressed down below the lower deviation. Stop loss can be placed at the high of the last bullish swing that led to the bearish price breakout. We will target 2 risk-to-reward ratios. Time to sell.
Take into your hands a plan, your own hands can land your own brand. And damn, I feel like no one takes accountability. They want the credibility, convincingly unwilling to put in the fucking hours it takes to get some power. Don't be fucking sour, take a cold shower, scream until you're louder, work until you're prouder, and fuck all the doubters, they're just fucking downers. I swear to God they all let me down. I always fought just to wear the crown.
Our take profit hit. Let's search for another trade setup. As we can see in this uptrend, after the price made a bearish pullback in this uptrend, the price gravitated upward above the upper deviation. Stop loss can be placed at the low of the last bearish swing that led to the bullish price breakout. Time to buy. We will target 2 risk-to-reward ratios. Let's patiently wait to see how the buy trade goes.
It's only worth it if you work for it. It's only worth it if you work for it. I won't stop till they hear me now. I won't stop till I wear the crown.
Our take profit hit. As we can see, the more swing points available for the formation of the dynamic linear regression channels indicator chart pattern will determine the reliability of the chart pattern. Also, to be on the safer side, ensure patience and a great volume breakout for the confirmation of the chart pattern. Also, as a beginner trader, master the continuation trading strategy before proceeding to its reversal breakout of the upper or lower structure whenever it forms on the price chart.